Hello, friends. If a 2026 Medicare notice says you are paying an income-related surcharge called IRMAA, there is one Social Security form that may reduce that charge, and in some cases eliminate it entirely. The form is SA-44. At the highest 2026 income tier, the Part B IRMAA alone is an extra $487 every month, and the Part D adjustment can add another $91 a month on top of the prescription plan premium. That is real money, and the important detail is this: the income Social Security used may no longer reflect what is actually happening in your household today. Now, I want to be precise from the beginning. SA-44 is not a magic form that wipes away every Medicare charge. It applies specifically to the income-related monthly adjustment amount, or IRMAA, when a qualifying life-changing event has reduced household income. But for the people who fall into that category, this is one of the most important Medicare forms to know about. And this is exactly the kind of rule we track here on Dark Macro by Walter Berron. If staying ahead of Social Security, Medicare, premium, and benefit changes matters to you, hit subscribe. Rules and dollar amounts change, and knowing what an agency actually allows can make a major difference. Number 1. First, understand exactly what this extra Medicare charge is. For 2026, the standard Medicare Part B premium is $202.90 per month. Most beneficiaries at or below the standard income threshold pay that standard amount, but higher income beneficiaries can be charged IRMAA in addition to the standard premium. For a person filing an individual return, the 2026 IRMAA begins when modified adjusted gross income is above $109,000. For a married couple filing jointly, it begins above $218,000. The first IRMAA tier adds $81.20 a month to Part B and $14.50 to Part D. The next level adds $202.90 to Part B and $37.50 to Part D. Then it rises to $324.60 and $60.40. The next tier is $446.30 for Part B and $83.30 for Part D. At the highest tier, the additional amounts are $4,087 for Part B and $91 for Part D. That means the highest income Part B beneficiary with full Part B coverage pays a total Part B premium of $689.90 per month in 2026. Part D works differently because the regular plan premium varies by plan, but the IRMAA amount is added on top. So when someone looks at a Social Security notice and thinks, why is my Medicare premium so much higher than the standard amount? IRMAA may be the explanation. Number 2, here's where the timing problem enters the picture. For 2026 IRMAA determinations, Social Security generally looked at income information from the federal tax return filed for tax year 2024. If that information was unavailable, the agency may have used 2023. Think about what that means. Someone might have earned a high salary in 2024, retired in 2025, and now be living on dramatically less income in 2026. Yet the Medicare surcharge can initially be calculated from that older, higher income year. That does not mean Social Security made a mathematical mistake. The program is working from the tax information available under its normal process. But Social Security also has a procedure for certain situations where that older income no longer reflects current circumstances. And that procedure leads directly to Form SA-44. Number 3, who can actually use SA-44. Social Security identifies 8 qualifying categories of life-changing events. End. They are marriage, divorce or annulment, death of a spouse, stopping work, reducing work, loss of income, producing property under qualifying circumstances, loss of pension income, and certain employer settlement payments connected with an employer's bankruptcy or reorganization. For many people approaching retirement, the 2 categories that immediately stand out are work stoppage and work reduction. Social Security's current form says this category can apply when the beneficiary or the beneficiary spouse stopped working or reduced work hours. So picture the basic situation. A person had high employment income in 2024. That income pushed the person above the IRMAA threshold. Then retirement or reduced work occurred, and current income fell substantially. SA-44 gives Social Security a way to consider more recent income information instead of automatically relying on the older tax year, assuming the agency's requirements are satisfied. There is also an important limitation. Not every decline in investments or every reduction in income counts as one of these life-changing events. For example, Social Security describes loss of income-producing property as a loss outside the person's direction, rather than an ordinary voluntary sale or ordinary investment risk. The concrete first check is the IRMAA notice itself and the 8-event list on Form SA-44. Number 4. What is actually on this form? SA-44 is much less mysterious once the 5 steps are broken down. Step 1 identifies the life-changing event and the month and year when it happened. Step 2 reports the more recent year's income. Social Security defines modified adjusted gross income for this purpose as adjusted gross income plus tax-exempt interest. The current SSA-44 instructions point to adjusted gross income on line 11 of IRS Form 1040 and tax-exempt interest on line 2A. This part matters because Social Security can accept an estimate in qualifying circumstances. The agency's current instructions give a 2026 example. If income did not fall until 2026, or it fell in 2025, but will be even lower in 2026, the form allows an estimate of 2026 modified adjusted gross income to be reported for the 2026 premium determination. If the income reduction happened in 2025 and the income will not be lower in 2026, the instructions describe using 2025 information instead. Step 3 asks whether modified adjusted gross income is expected to become even lower in the following year. If it is, the form provides space for that estimate as well. Step 4 is documentation. If the federal tax return for the more recent year has already been filed, SSA says the evidence can include a signed copy of that return or an IRS transcript. If the income figure is an estimate because the return has not yet been filed, Social Security says it will later require the filed return. The life-changing event also requires evidence. For work stoppage or work reduction, the SSA-44 instructions list examples, such as an original signed employer statement or copies of pay stubs. For loss of pension income, the form lists a letter or statement from the pension administrator explaining the reduction or termination. Marriage, divorce, and death of a spouse have their own documentation requirements. Step 5 is a signature, phone number, and current mailing address. That is the form. That is number 5. How does someone actually submit the request? Social Security now has a dedicated page called Request to Lower an Income-Related Monthly Adjustment Amount at SSA.gov's Medicare IRMAA. ABL 10, the agency says eligible individuals can sign in and complete and submit SSA-44 online. Social Security also allows the completed form and evidence to be faxed or mailed to a Social Security office, and an appointment can be scheduled for help with the request. The official Social Security number is 1-800-772-1213. The tie number for people who are deaf or hard of hearing is 1-800-325-0778. Social Security's current contact page says representatives are available in most U.S. time zones Monday through Friday. For locating a field office, Social Security provides its official locator at SSA.gov's locator. Those are the official routes, not a third-party Medicare website, not somebody asking for a Social Security number through an unsolicited message, and not a paid company claiming it as a secret government form. Number 6, there is one situation where SSA-44 may not be the right form. Suppose there was no qualifying life-changing event. Instead, the issue is that the income information itself was wrong. The IRS later corrected it. An amended tax return was filed, or the beneficiary is formally disputing Social Security's IRMAA determination. That can involve a different process. Social Security specifically says that someone with an amended income tax return can call 1-800-772-1213 and tell the representative that the request concerns lowering IRMAA after an amended return. And when someone is formally appealing a Social Security determination, the agency has a non-medical reconsideration process. Form SSA-561 is the request for reconsideration form. Social Security generally says a reconsideration request is filed within 60 days after receiving the decision. That distinction is important. SSA-44 is aimed at requesting use of more recent income information because of a qualifying life-changing event. SSA-561 is associated with requesting reconsideration of an agency decision. They are not interchangeable simply because both can involve an IRMAA dispute. Number 7. What happens after Social Security accepts an income estimate? There is a detail here that can prevent a nasty surprise later. Social Security says estimated income used for an IRMAA decision will eventually be checked against IRS information. If an estimate changes or the eventual tax return shows a different amount, SSA can update the determination. The agency's SSA-44 instructions specifically say later corrections can include retroactive assessments or refunds. So this is not a loophole where someone simply writes down a lower number and permanently receives a lower premium. It is an official process for reporting a genuine income reduction tied to a recognized life-changing event, and Social Security can later verify that information. Now let me bring all 7 points together. First, the charge we are talking about is IRMAA, the income-related amount added to Medicare Part B and potentially Part D. Second, 2026 IRMAA can be based on older income information, generally the 2024 federal tax return, or 2023 when the newer information was unavailable. Third, SA-44 can apply when income falls because of one of Social Security's recognized life-changing events, including stopping work, reducing work, marriage, divorce, death of a spouse, qualifying loss of income, producing property, loss of pension income, or qualifying employer settlement. Fourth, the form records the event, the more recent income or estimate, possible future income, supporting evidence, and the applicant's signature. Fifth, Social Security provides an online submission process as well as fax, mail, phone, and appointment options. The official number is 1-800-772-1213, and the official page is SACOV-COMD Medicare IRMAA. Sixth, SA-44 is not the answer to every IRMAA disagreement. Incorrect tax information, amended returns, or a formal appeal may follow a different Social Security process, including reconsideration in some cases. And seventh, estimated income can later be verified against IRS records, with adjustments made if the final information changes. So the headline is dramatic, but the actual rule is even more useful when it is understood correctly. Form SA-44 may reduce or eliminate an IRMAA surcharge when an older high-income year no longer represents current income because of a qualifying life-changing event. It does not automatically erase everybody's Medicare premium, and approval depends on Social Security's determination. This is general educational reporting about Medicare, Social Security, tax-related income rules, and public programs. It is not personalized financial, legal, or tax advice. Individual circumstances can produce different results, so the relevant agency can confirm how the rules apply to a specific case. If this explanation helped make an unusually confusing Medicare rule clearer, subscribe to Dark Macro by Walter Berron and share this video with someone who recently retired, reduced work, lost a spouse, or received an unexpected IRMAA notice. A form cannot help somebody who never learns that the form exists.